and it's results season. So let's get straight to a banking name that came out with a set of numbers over the weekend. IDFC First Bank's results, well, it was a little lower than some estimates despite utilizing the COVID buffer provision. Although there was some improvement on the asset quality front, as well as NIMs continue to hold at higher levels. Mr. Vaidyanathan, the MD and CEO at IDFC First Bank, joins us on the show. Hi, Mr. Vaidyanathan. Always a pleasure talking to you, sir. Well, give us a few details then. You know, your restructured book is around 2.8, 2.9% approximately. How much of that can slip into NPAs according to you? And also, what was the incremental restructuring that was done in the second quarter? Please go ahead.
About 0.9% in this quarter, it moved from 2% to 2.9%.
Okay.
And about 45 basis points out of the 90 basis points was from the rural business. So with regard to the extent of portfolio that can move to NPA or can move to provisions, etc., broadly we have when we have guided for the numbers for the year at 2.5% of the average book is what we have guided right at the beginning of this year itself. That is all inclusive of those numbers.
Got it. All right. And what was slippage from the restructured book in the past quarter?
I don't know the number offhand, but let me just say that last quarter our provisions was, if you remember the first quarter our provisions was 1,860 odd crores. This quarter was 460 crores. If you put them together, basically you will see that we have provided for close to about 2,350 crores in the first half.
Yes.
For the full year, we have guided for 3,000 crores. So 3,000 minus 2,400 crores, that's 600 crores. So if you believe our guidance for the rest of the year, you know what the provision for the next two quarters will be. It's basically 650 crores in 2 quarters.
Got it. All right. Your NIMs as well, you know, they continue to look good. It's at around 5.7% approximately for the last quarter. That's improved both on a year-on-year as well as on a sequential basis. Can you maintain it at this level? Will there be some kind of tapering off, or will you improve from here?
Probably slightly improve, but probably taper off from here because this is not meant to go up indefinitely. We had guided initially for 5 to 5.5% at the time of merger. This 5.7% also has a bit of an uptick because of the fact that certain amount of in the subsidiary we had a certain amount of income which is now getting added up to the income line and is also adding to the expense line. So without the technicalities, of course, let me just say that it should flatten out from here, mainly because of the fact that we are now beginning with prime home loans, where the margins are relatively, let me say, more moderate.
And what should be the rough range then? I missed that number.
Well, I mean, right now it's 5.7. I think at about 5.96%, it should stabilize. It won't go up indefinitely, but that would be pretty healthy margins from the bank.
Okay, all right. Any recoveries, upgrades that you're expecting for the second half of this fiscal?
Yes, we are actually getting very, very strong recoveries from the portfolio that is provided before. That's one of the best benefits of the retail business actually, because you provide as per a formula, but eventually when the economy comes back, many of those customers pay back. So the short point is that basically then we have guided for about 650 crores of provision for the rest of the 2 quarters left for us now, excluding of course the Vodafone account. That 650 crore takes into account slippages and write-backs, all net.
Okay, all right. The other buzzes, there could be some inorganic growth. Is there a possibility you're looking at any opportunity on those lines, or you want to rule that out completely?
No, we're not talking anything at all.
Okay, so no inorganic growth on the cards. Taking your word for that, Mr. Vaidyanathan. But, the other important point is you have 2 listed entities, that is IDFC Limited as well as IDFC First Bank. Now, the street is waiting by whether or not there's a merger that could be taking place. Tell us what is the status update out there, and is a merger on the cards?
You know the answer to that basically, Nigel, because, IDFC Limited had sent us a letter saying that, look, we are thinking about it, thinking about divesting our investments, and we'd like to talk to you about it. And that's the last conversation we've had on that matter, in communication we had on that matter. We haven't yet responded to them.
Will you all be revisiting it at any time soon? If you could give a timeline.
We haven't responded to them because they did write to us, and this is something that we picked up at the board for a brief discussion. but we will make our due response to them in due course.
What would that due course be, sir? By the end of the third quarter or fourth quarter, should we hear something about this?
At this point of time, like I said, the main thing is about the fact that they have written to us saying that, okay, we'd like to hear your views. So we'll probably respond to them saying that, yeah, fine, let's figure out what you need to do. So, but let me just briefly say that that it's very early stage yet.
Okay, all right. So we'll take your word for that, Mr. Vaidyanathan. Also, tell us in terms of business, which segment of the retail book are you focusing on in terms of where you're seeing traction? Where do you see growth coming from?
See, for us, really, in this market, has come back pretty reasonably well. You know, post the first wave and post the second wave, basically all business growing. We don't need to chase growth; it's just coming by itself because economy is growing and all that. But within that, the key growth area is home loans, because home loans has grown year on year by 46%, and mainly because we've now entered the prime housing business. Basically, we lend at about 6.9% to prime corporates and so on. That business is really doing extremely well.
Okay, all right. It's been good chatting with you, Mr. Vaidyanathan. Always look forward to having a word with you. You've given us quite a lot of clarity. You're sounding reasonably optimistic about the second half of this year, and we wish you well. Look forward to hearing more about that merger or some progress on that front as well.